The tax season is here and it's important to know how each of your income is taxed for federal and state taxes. So this video specifically focuses on dividend income for non-resident aliens. So without wasting any time, let's get into it. First, let's look at what dividends are. In simple terms, if you invest in stock market and invest in some company, let's say Apple, they have their way of rewarding their shareholders by paying out dividends. So suppose Apple receives $100 in a year, they have an option to either reinvest in their own company to grow even further or give out dividends. So people are happy and the shareholders are satisfied that they are receiving some actual income. This is the money that is actually sent out in your bank account. So this is real money that is sent out by companies. If you had dividend income of more than $10 in any given financial year, your broker, which might be say Robinhood, Public or any other broker, will send out a form 1099 DIV which you have to attach in your tax filing. This will basically show how much dividends you earn in any given financial year. But remember that even if you earn less than $10, you won't receive the form 1099 DIV, but you have to report the income, dividend income, to the IRS irrespective of the dollar amount, even if it's 10 cents or $1 for that matter. Before understanding how the dividends are taxed for non-resident aliens, it's important to know how the incomes are classified by the IRS. First is effectively connected income. This is all the income that you earn when you are working with the employer. Suppose I'm working with a company ABC and all the wages that I earn is considered as effectively connected income. So all this income is taxed similar to the tax table that is relevant for US citizens or residents. So it's a graduated rate and we have various tax slabs. So all your effectively connected income would be taxed at this rate. The second type of income is not effectively connected income. This basically includes all the income that is FDAP, so which stands for fixed, determinable, annual and periodic. So this basically includes all the type of income such as dividend income, interest income, royalties, any gains for gamblings or capital gains, etc. So these terms might seem a bit complicated and it might be difficult to wrap your head around it, but don't worry. In very simple terms, effectively connected income is the income that you receive from your employer, all the wages that you earn, or if you have your own business, so all the income that you earn from that business is considered effectively connected income. On the other hand, not effectively connected income is all the income that you don't directly earn from a business or say from your employer. So it might include interest income, dividend income, winning from gamblings or capital gains for that matter, and so on. So all the income that is classified under FDAP income is taxed at a flat rate of 30% or a lower treaty rate if your country has some treaty with the US. But for India, at least I know that we don't have any specific treaty for the FDAP income. So we have to pay a flat 30% tax on the dividend income, which is really unfair because your actual tax slab for your income might be say 20 or 25%, but for the dividend income, you have to pay a flat rate of 30%, irrespective of if you earned any other income or not. So suppose you earn $100 in any given financial year, you have to pay a tax of $30 directly to the IRS. It doesn't matter if you earned say $0 in the financial year or you earned $10,000 or $100,000. Even I was shocked when I figured out that we are taxed at a flat 30%. Like really, it seems unfair. I don't know how the IRS came up with this rule, but that's how it is. Now that you know what is the tax form that is used for dividends and how much you are taxed for that, next it's important to know which form to file when you are reporting your dividend income. So the main form for the tax filing for non-resident aliens is 1040 NR for federal taxes, and for dividend income you have to report it in Schedule NEC for form 1040 NR. Here basically we will include all the dividend income that you earned, which is reflected on your form 1099 DIV. So you enter that amount in the Schedule NEC and you have to attach this page with your tax filing for federal taxes. The only good thing about this rule is that once you are taxed at a flat rate of 30% on your dividend income, you don't have to report this income in your state taxes because this is not effectively connected income. So suppose you earn $10,000 in your W2, only that income will go in your state taxes. The income that you earn from dividends, say for example $100, that won't go in the state tax filing. So you are not taxed too heavily, but the 30% rule still applies. So this is how your dividend income is taxed if you earned any dividend in any given financial year. I know it's a bit unfair as a rule, but don't let this stop your investment journey, because dividends are a great way of passive income. Like, you don't have to work anything for that, you just have to hold the share and you will keep receiving dividends every year, every quarter, or so on. Like, that depends on the company. The company is not obligated to pay you dividends, but again, as I mentioned, it's their way to reward the shareholders for holding their share. Share this video with your friends to make them aware and know how the dividends are actually taxed for non-resident aliens. Like and subscribe my channel if you find my content useful. Thank you again for watching this video. Until next time.